Dear colleagues, Your Excellency, the Minister of the Kingdom of Saudi Arabia, the President of the IZA, a warm welcome to the 7th Annual Conference of the IZA and the World Bank on Employment and Development. As you can see in the banner, we have been traveling quite a lot over the past 7 years, west and east. It is a great pleasure for me to welcome you all, also on behalf of the two co-directors of this program of work, to this conference. Let me also spend a word to thank a lot the two institutions in Delhi that have played a major role in organizing this conference. Without their help and their support, their commitment, I don't think we have managed to have this conference, the ICRIER and the Delhi School of Economics. Now, you have heard a lot already, but it's really a privilege and honor for me to introduce our keynote speaker today, Professor Kaushik Basu. As you know, he has been appointed very recently as the new Chief Economist and Senior Vice President of the World Bank. And I think I can express on behalf of all of you our heartfelt congratulations to Professor Basu for this important nomination to the World Bank. And I think in different ways, we all look forward to work with him and his staff in his new capacity. Now, Professor Basu has an impressive CV, you all know that. Let me just mention a few highlights, and there are many more that I could not list here. He was the Chief Economic Advisor of the Government of India at the Ministry of Finance, while he was on leave as a Professor of Economics from the Cornell University. He served as a Chairman of the Cornell Department of Economics and the Director of the Cornell Center for Analytical Economics, and he also headed the program of Comparative Economic Development. Now, let me just say, just quoting what the World Bank President said when he announced the appointment. Work at the Ministry of Finance is always useful. In addition to his impressive academic achievements, Kaushik is uniquely suited to help us offer evidence-based solutions and advice to client countries and provide innovative excellence in leading our development research. Kaushik brings first-hand experience from a developing country and will be a terrific asset to the institution. I think it will be a terrific asset for all of us in our work on employment and development. Professor Basu holds a PhD from the London School of Economics, and he did his PhD on choice theory. He founded the Center for Development Economics at the Delhi School of Economics in '92, and is a founding member of the Madras School of Economics. He held many professional positions at Harvard, Princeton, the London School of Economics, the MIT, and he received the Mahalanobis Memorial Medal. As you know, he has written extensively in many different fields, from development economics, of course, on welfare economics, game theory, industrial organization, political economy, and the economics of child labor. Let me just mention one thing. In a recent book, Beyond the Invisible Hand, Groundwork for a New Economics, that was published by Princeton in 2011, and now is, I think, translated in a number of other languages, Professor Basu argued to some extent against some way to interpret the invisible hand of Adam Smith. And he argued very strongly for collective action and the need to shift our focus from what may be only an efficient economy to what should be also a fair economy. So given the topic of our conference, which is to make our economy more inclusive for all, but the special topic of this edition of our conference, in particular for youth employment, I think for Professor Basu is just what we need to kickstart our discussion over the next 2 days, to provide his insights, and I'm sure we will reflect on his main point throughout the next 2 days. With no further ado, it's really a great pleasure to have you with us, and the floor is yours, Professor Basu. Thank you. Shutting this cause a collapse? No, okay. Yeah, I'm going to use this. Stefano, thank you very much for this very, very generous introduction. I want to thank the organizers, Klaus, my friend from a long time ago,
when he invited me, as he told you, I was in the government of India, and I knew that by this time I would not be in the government of India, but I was, the plans were to be in the peace and idyllic setting of upstate New York by this time, but that changed very suddenly, and but I'm glad that I'm able to stay with this plan to be here on this occasion. And in many ways, actually, this is just perfect, because what I did not know at that time was that the World Development Report 2013 was on labor. And I joined the World Bank, and in fact my the first task was within 2 hours of joining the World Bank, I was pushed into a room to launch or do a pre-launch of the World Development Report. But this is a subject, as was mentioned just now by Stefano, it's a subject very close to my heart. I've worked on problems of labor regulations in developing countries. I've worked a lot on child labor, a topic of great interest to me. So it all sort of fell together, including this conference. So what I'm going to do today is draw a little bit, it'll be a two-part kind of discussion. In the first, I'm going to speak about the global context and policy response, drawing a lot from the World Development Report 2013. Now, as was pointed out, this is the year always is 1 year ahead, but it should not surprise you too much. American cars are always like that. Toyota 2013 is out all over. It makes people feel that you're more modern than you actually are. You're 1 year ahead. In fact, the other extreme of this, I must tell you, was in the 1980s, when I was at the Delhi School of Economics. Our journal, the Indian Economic Review, used to come out with a 4-year lag. So it was the other way around. So the 1982, the journal that would come out was the 1978 journal, would come out in 1982. And that had one very important side to it. If you had discovered a new theorem or a new idea and published it in Indian Economic Review, history would record it as having been discovered 4 years earlier than you actually did. Well, with that, on to today's topic. So the global context, I'm going to give you a very brief description, and then I want to get into something which is politically a touchy topic. Shankar has already touched on this, on labor regulations. And you know, there aren't final answers to this, but at the same time, this is a subject I feel that should not be treated as a taboo subject, which should be discussed and debated. The World Development Report talks about it in the form of a plateau idea. I will get to that. But first, a couple of remarks on the global context. Okay. A quick picture, industrial production. How has it gone in the last sort of year and a half or close to 2 years? As you can see, the picture picks up on the fact that the crisis, the Great Recession, which started in 2008 in the US, got exacerbated by 2011, and the Eurozone crisis, the sovereign debt crisis, reared its head in 2011, and you can see in the middle of that year, industrial production drops everywhere, plummets down. What has been pointed out in recent times is that there's a glimmer of hope, and if you look at the last sort of couple of months, July onwards, all these graphs are turning up. So some hope, but nothing is certain in life, and so that includes economic life. And you can go back to, for instance, the April 11 over there. If you again looked at a couple of months in April 11, you would have said that, look, things are beginning to look up. But immediately after that, you go for the big plummeting downwards. I don't want to put cold water on this little bit of enthusiasm that you may feel here, but it simply underlines the fact that in economics, you have to have your eyes open, and there is uncertainty in the world you'll have to live with. But there has been a small turnaround over the last few months. Okay. I want to describe to you now we'll go on to the next page, a couple of broad areas, and since I'm just skipping over quickly the sort of dangers ahead of us, the emerging economies on the whole have done well. And you can see this from even here in India. Look at India's growth, which is causing a lot of anguish and people being upset in India. That growth is now coming down. The last quarter growth was 5.5%. But 5.5% growth in today's climate in industrialized countries is something that you would do anything to get a growth of that kind. So even with the downturn, India is at 5.5, Brazil, which was doing very well, is down to somewhere 2, China, which was, you don't know where, 10% plus, is now down to 8, but still these are just very good figures. So the emerging economies in the world are all doing worse than what they were doing a couple of years ago, but by global standards, they are doing fine. The concerns, there is a US fiscal cliff coming up, which is being written about and talked about a lot. And now that I'm in the US, I'm seeing that on television every day, on various channels, the fiscal cliff being talked about, which is the tax rates, which will go up and it's going to suddenly hit. And the hope is that the cliff will be softened up. There is another cliff, which is a much further away and people are not talking about it, which is the European debt cliff, which is going to come upon us at the end of 2014 and at the beginning of 2015. Most of these cliffs, this is sort of human tendency. You look away from the cliffs till you're just 2-3 months away when it's looming right up in front. Likewise, for the US fiscal cliff, there were a few articles 1 year ago, but it's only now that we've woken up to it, and I'm just warning you that the LTRO, which was a huge injection of money to banks in Europe, the repayment will have to occur in the end of 2014 and beginning of 2015. It's roughly $1.3 trillion given out to banks, and all of that will have to come back. So that is a fiscal, or rather, a debt-related cliff, a European debt cliff we can call it, which is going to come there. Hopefully the world will weather it fine, but we will feel some of the choppiness of the climate. The tight conditions in the food markets and commodity markets is making things difficult for emerging economies, and we will have to live with that. Let me with that go over to globalization and one aspect of the labor market, which is politically in a different way a sensitive matter, is that the total amount of manufacturing jobs in the world has roughly remained stable. But there is a great movement away from these jobs earlier being in rich countries to being in relatively poor countries. They are moving away. And also, as you know, that thanks to modern technology in today's world, it's possible to have a job move without the worker actually moving. I mean, you can have your back offices in a faraway place, and this always causes heartburn and some political trauma that our jobs are moving away. But I feel really that's the wrong way to view. This is the way the world has always been. New technology, new inventions, jobs move around the world, and prosperity grows out of that. I actually have a lot to say on this, but I will not, excepting to point out that the lecture that used to be given historically from industrialized and rich countries to emerging economies that don't indulge in protectionism, it is time for reversing that lecture and reminding industrialized countries, don't indulge in protectionism, don't give in to that. It is bad for you as well. For the rich countries, it is bad for the poor countries. We will have to allow for these adjustments. Yes, they cause some hardship. We will have to live with that. Next. Again, I mean, this is just to give you a bit of a glimpse of the global landscape. These are the low-income countries, but with that we've thrown in India over here. Average schooling years, and this just shows that India does not do well at all. On this, we've got Bangladesh, Cambodia, Kyrgyz Republic, and India. India's average schooling is poor. But this is again something which this audience with lots of Indians here, people would know. India has historically had a very unusual education system where the higher education system by the standards of emerging economies and also actually by the standards of industrialized economies, the higher education system has been excellent. But a lot of people have been left in illiteracy. This is not desirable, and the figure that you're seeing there is a reflection of this somewhat polarized, well, I need not have used the adjective somewhat, polarized system of education in India where the higher education is very good, but we still need to work a lot on basic literacy. However, maybe because of that and the country generally being well organized, better organized than it was earlier. The value added per worker in India, despite that, is actually pretty high. I can put it in a chart with other emerging vibrant economies where India will show up as doing worse than them. But in this cluster, India does indeed stand out. And this is again a testimony to the power of India's good higher education system, not to for a moment take away from the importance of greater basic literacy. Next. This is just repeating a figure on the amount of job movement that is taking place in the world. Remittances from abroad as a percentage of GDP, very high from a cluster of countries. Take a quick look at that picture and let us move on to the next slide on demographic pressures and what Shankar referred to in the morning also, the so-called demographic dividend. We do know that in South Asia, even to a certain extent East Asia, Africa is going to get this a lot. There is going to be a peaking of the working age group population. India is already on the foothills of this demographic dividend. 2034, I believe, is when we are expecting our working age population as a fraction of total population to peak. This is a great opportunity, but as people keep repeatedly reminding one another that you have to provide the skill, you have to have these people employed for this opportunity to be seized. And let me also just point out that India's savings rate, this is something very important, which is a major driver of growth. The bulk of the savings in any country is done by the working age population. So when the demographic dividend occurs, this age group peaks, a country's savings rate tends to go up. So my expectation on India is that over the next year, probably India's savings rate will drop a little bit. There has been a lot of fiscal stimulus over the last couple of years. So a little bit of a drop in savings rate over the next year maybe, but then it will pick up the savings rate and being helped by the demographic dividend. Next. Labor market policies on a plateau. Since I will talk about this, let me just quickly mention that there are various dimensions on which you can measure the rigidity of labor market rules. One is separation cost. When you're retrenching workers, how costly is it to retrench workers? There's one kind of cost which doesn't even get captured here. There are situations where it's virtually impossible to retrench. But when you can retrench, how costly is it? It's actually pretty costly in India, is what the chart on the left-hand side is saying. The minimum wage chart on the right-hand side is harder to interpret, and for reasons of time, I'm going to gloss over that. Let me simply, having spoken about the labor market rigidities, let me point out, and I'm going to talk about the rigidities a bit more with the Indian example. I'll come back to that in a moment. What the World Development Report tells you, and this is important, is that there are country specificities which you have to keep in mind when you're developing a program of what should be done in that country. And the emphasis on labor market regulation, the laws, the report tells you, is on a plateau. It doesn't matter. This is actually counter to what my intuition was, I have to say, till I read the report, that the labor market regulation does not matter if you're in the middle of that plateau. But if you're already over-regulated, it matters a lot, and if you're under-regulated, it matters a lot, but there's a flat plateau. Now, but you have to keep in mind that when you are developing a plan for a country, different countries have different priorities, so there are some conflict-afflicted regions where you'll need one kind of a program. There are countries with a lot of the population in the rural area, agricultural area, you'll need one kind of plans there. There are countries in the throes of demographic transition, South Asia is, you need something there, and there are countries with natural resource booms and busts, and you need another set of policies there. There's a lot of common policies, but also you need to do a tailor-made design for your country and the region. Let me move to the second part, which is a combination of what I've studied for a long time, the Indian policy problems, and also what I used to do before that, which is a bit of economic theory. I'm going to blend the two and address this problem of labor regulation. And we can gloss over this chart and pause over here and take a look what's happening. You will see over here for India The bulk of the firms, and this again echoes the tiny bit of India's organized sector that was put up in the chart in the morning. The bulk of Indian workers work in firms which employ between 1 to 4 workers. So tiny firms, a lot of them working without power and electricity. This is very, very informal. The big firms are relatively small. What has caused this? Lots of reasons are possible. One particular topic which is generally tends to be treated as taboo in India, but I feel we should discuss. And taboo in India, actually I say, but at the same time I have to say that this is a country where fortunately one good thing about India is thanks to the very, very vibrant press, nothing really remains a taboo. Everything is out there and people are always discussing, and it's heated debates that go on. India's labor laws, I think we have to put some thought to that. This is the Industrial Disputes Act, which makes it very difficult to retrench workers. Now, I should clarify 2 important things about this law. This law is a 1947 law. In fact, it became a law before India's independence, before the 15th of August. This law is really, the difficulties placed on firms are for large firms. For a firm employing 50 workers or 100 workers have all kinds of strictures which come from the Industrial Disputes Act. But a paper very close to my heart, paper and research, is Cass Sunstein's work on the expressionist function of law. Sunstein reminded us that once you have a law, the influence of the law goes beyond the written word of the law to the spirit of the law. The norms in the society tend to get influenced by that, and I feel actually this law has created norms in India which leads to inflexibilities in the labor market. Are they good or bad? All I will tell you is that on the plateau chart, Martin is over here, my feeling is that India is closer to an edge with over-regulation, but nothing is sacrosanct and certain in economics. I will give you some arguments why I feel this needs to be debated, and my own hunch is that the rigidities are hurting in India. India would do much better if we had greater flexibility, but I will present some theoretical ideas. I think we need empirical research, and with that, this is something to be debated for and for India to consider. There are 2 theoretical arguments I was going to present, and very, very quickly, but these are very intuitive, easy arguments. First of all, of the 2 arguments, I want to take up one case which is, in fact, I will give that case virtually in words and skip over, which is the volatile, when the demand for a product is volatile. And the second case is where labor skills vary. With that, let me go over to the first model, and don't even look at that, it will be up there, but don't look at that, because I think I can convey the basic idea to you in words much better than if you get distracted by looking at the screen. So let me tell you what this argument is. I faced this when I was working in India. In India, you go to garment producers in India who were catering to a market in New York. And one constant refrain would be, and this is not difficult to see, they would say that India actually goes in for the slightly upmarket fashion garments. India is pretty good. There, the demands are volatile. One summer in New York, the fashion could be a particular yellow tinged cloth. I mean, that's an example, not that that was actually happening. Shirts of that color. And in India, they would want to react to that and flood New York with that. For that, this firm would have to employ more workers. You sort of upscale your market, get more workers in, supply to New York with that. But by next, fashion is volatile. By next year, that fashion can be completely gone. If this firm can't downsize after having built up, the firm faces a choice when the huge demand comes. Do I employ these people and take a risk that next year I'll be left with these workers without the demand when I'll need to downsize, or I simply say that let it go. The big demand, I will not provide to it. The answer is not certain, but I feel in India, the option very often taken has been you don't build up your firm. And if you look at the size of firms in India, they are much smaller, the garment industry, not only compared to China, but compared to Bangladesh. And a little bit of history, which is quite interesting. Bangladesh was formed out of Pakistan. Pakistan and India inherited the same Industrial Disputes Act in 1947 because, as I told you, it's a pre-independence act. But Pakistan revoked that act in 1956 for completely the wrong reasons. It was to be able to handle trade unions in a way where handle is a bit within quotes. So they got rid of the labor laws for that reason. Bangladesh, born out of Pakistan's labor laws, never inherited that law. And actually it went in for some very intelligent redesign of its labor laws, and it is getting some of the benefits of that. That's the argument, that if there is volatile demand, if you allow firms to downsize, in fact, the total demand for labor may go up, because every time there is a great demand, you'll employ workers. Whereas if you don't allow downsizing, you may not take that first step in employing more workers. Let's skip over this and go straight away to the next argument, slightly more intricate. And I will go over, let's go over this to the next page, which has a picture. And we'll stay here in this picture, and the whole argument I'll give you in words. Let's consider the following kind of situation, which is also very, very possible, is that there are two kinds of workers. Workers who are skilled and workers who are unskilled. But we do know that there are certain kinds of skills which you cannot check up by looking at a person's degree. In fact, very often the degree does not match well with skills anyway. So, but you get to know a person's skill if you employ the person. The person is with you for a while. You discover that this person has the kinds of skills that you need. So suppose there are two kinds of workers, skilled and unskilled. And there are two kinds of firms. Firms which don't need skilled workers, the sort of informal sector, large informal sector, employing people, whether they have skills or not, you don't put the skills to use. The picture you have over here is assume that the skilled workers are not being treated specially. There is a demand for labor, there is a supply. I've purposely made it vertical for the picture to be easier on the eyes. There is a supply, demand, and wage prevails, all unskilled workers, all workers doing unskilled jobs. But sitting within these workers, there are some skilled workers. But the only way to have these skilled workers, the skill to be discovered, is for firms which need this kind of high-skilled workers to employ them. But since they can't tell who is who, they will just employ workers at random, filter them after some time, and retain the skilled workers, retrench the unskilled workers. The unskilled workers will go back into this market. If the law allows you retrenching relatively easily, you will be able to do that. If you can't do that, the equilibrium remains over here, because a firm that needs skilled workers will not want to employ a lot of people and then be stuck with them without being able to do this. Whereas if you allow firms to do this with flexible laws, a certain amount of retrenching, I can stay, yeah, this picture is perfect. Then what is possible will happen is the skilled part of this labor will be taken away by the organized sector which needs the skill. And look at the consequence of this. Even for the unskilled market, the wage rate goes up, as this picture shows you. As the labor supply, part of the skilled labor is taken away from this market, even the unskilled sector does better by this. I wanted this argument here because I wanted to tell you what is extremely important. Very often it is made out to be that the case for flexibility is to help only the organized sector. I don't think so. And I'm also not making the case for labor market flexibility for the sake of growth and industry. I'm making this case for the sake of workers. Informal sector workers, formal sector workers. I think they will do much better if we create a legal environment where there is much greater demand for these workers. Time is running out, and there will be certain things which will come up, but what I will say will not match with that. If you can manage two things with two parts of your brain, look at that and listen to me. Otherwise, you may want to just listen to me. I want to sound, since this is a very touchy topic, I do want to sound a word of warning. Don't take me to be giving you the other extreme view, which is the extreme free market Chicago school view that leave it all to markets and contracts and it'll be fine. I'm not saying that for a moment. I'm fully aware that in today's world, contracts can begin to get so complex that people who sign on to contracts don't understand what they are signing on to. The US subprime crisis was in part that. You're signing on to a mortgage contract which is so complex, you don't understand what you've signed on to. It's only when things begin to unravel that you discover that you've signed on to things. So contracts also need limits. You can't allow for any kind of contracts for any worker to sign, because people will be cheated into signing into things that they don't want to. So you need a regulatory framework, but you need greater flexibility. And that's the spirit in which I think the World Development Report comes in. You don't want a complete free market in the labor market, any condition, any worker. You do need restrictions, but you have to allow for these minimal things. Some firms will pay high wages, but they'll need to downsize quickly when it shrinks. These kinds of flexibilities need to be built into the labor market. If done, the country can do much better. And here was the general summing up, which I will not do now, but thank you very much. Thank you for giving me this invitation and opportunity to be here.
Thank you, Kaushik. I think it was really a pleasure to listen to you and to try to follow you on the slides as well. You gave us a lot of insights. I cannot agree more on your points about regulations. I think the point you put on and you mentioned, I think, will be issues that we'll be discussing over the next 2 days in the context of the presentation of the WDR that is just coming, but also in many of the other sessions. A big thank you for being with us. Maybe I think Klaus said that when we actually wanted you, absolutely, for this conference, we didn't know that you were to be appointed as the chief economist of the World Bank. We didn't know that there was a WDR on jobs, but this is just a sign of the efficiency of this program of work. With that, precisely because we want to be very efficient, I think we have 1 minute to go to the parallel sessions. I think you have a plan.